Every time the Fed makes a big announcement, my phone just absolutely blows up. And it's usually the same question. So, how much lower are the interest rates now? If you're one of those people, this video is an absolute must-watch for you. It's one of the biggest misconceptions out there. And the truth is, what you're hearing in the headlines or scrolling across your news feed, all this might be actually giving you the wrong idea. So, in this video, I'm going to break down what really happens to mortgage rates when the Fed either hikes or cuts the rate, and why you shouldn't expect your monthly payment to suddenly drop the very next day. And what does this all mean if you're buying or selling here in Sarasota? Now, if you're new to our channel and you want to learn everything there is about living in Sarasota and the surrounding area, make sure you subscribe and tap that notification bell. This way you'll be the first to learn about all the new videos. I'm Rob Rovnak, and every day we get calls, texts, and emails from people just like you wanting to know about Sarasota. So whether you're moving in 1 week or in 1 year, don't hesitate. Reach out to us today. My contact information is in the box below, and we'll be happy to help you make a smooth move to sunny Sarasota. Let's start with the very basics, because that's where most of the confusion comes from. The Fed does not set mortgage rates. What the Fed does is it adjusts the federal funds rate, and that's the interest rate that banks charge each other to lend money overnight. It's the shortest term loan possible, literally less than 24 hours. A mortgage, on the other hand, is a 15 to 30-year loan, for most people anyway, so really a totally different animal. So if the Fed raises or lowers the rate, it doesn't mean that your mortgage rate moves the exact same way. Instead, mortgage rates are driven by the bond market, and more specifically, mortgage-backed securities. Here's the key difference. The Fed meets 8 times a year to set their policy rate. The bond markets trade every millisecond. That means mortgage rates can react instantly to news, data, expectations, while the Fed is making an adjustment on a set schedule. Now let's make this practical. Imagine every Fed speaker for weeks has been saying, "We think we'll raise rates at the next meeting." Traders and investors don't wait around for the official announcement. They start making moves right away, immediately, buying and selling based on what that expectation is. So by the time that the Fed finally acts, raises, or cuts the rate, the market has already priced it in. That's why sometimes mortgage rates actually move in the opposite direction on that Fed day. For example, the Fed might cut short-term rates, but if the market already priced that cut right into the mortgage rates, they may have already dropped weeks ago, and now bounce a little bit higher on the official news, which is strange, but that's how it happens. It feels backwards, but it really is just the timing issue. Now let's talk about something that adds even more confusion: the Freddie Mac weekly survey. If you've seen some headlines saying that mortgage rates are lower, they're usually quoting this survey. But here's the catch. The survey is an average of the past 5 business days. So if rates were lowest earlier in the week and then jumped up higher later, the survey can still show a lower average, even though the rate that you can actually lock in today is maybe much higher. And right now, that's exactly what's happening. As of this recording date, mortgage rates are at 2-week highs, even though headlines might make it sound like they've been dropping. So when you see these articles, remember, you can't go back in time and grab Monday's rates. You can only lock in on the rate that exists today. So what does this all mean if you're here in Sarasota thinking about buying or selling a home? Number one, don't expect a Fed move to instantly give you a cheaper mortgage. By the time you hear about it on the news, the market's probably already adjusted. Number two, mortgage rates move daily, even hourly. They respond to economic reports, inflation numbers, and investor expectations much faster than they do to that Fed's official announcement. So when your lender says, "Do you want to lock in at today's rates right now?" it's not just idle talk. It could change tomorrow or this afternoon. And number three, even with this recent bump higher, today's mortgage rates are still lower than most of the past year. That's important. For buyers, it means affordability is a little bit better than it was at peak levels. And for sellers, it means that buyers are still active. But they're very sensitive to every little change in the rates. 0.25% can make a big difference in what someone qualifies for. Now here locally, we're seeing that play out in real time. A lot of buyers are watching the rate market closely and waiting for the right moment to jump in. It's like everyone is standing at the starting line of a race and waiting for that starter's gun to go off, to start running. Except there is no starter. You have to make that call when to enter, and maybe you jumped the gun or you waited too long to enter the race and you're behind. It all depends on what you need. Economists estimate that each 1-point reduction in mortgage rates lifts home sales by roughly 6%. And the National Association of Realtors, they project an even greater effect, between 10 and 15%, which equates to as many as 500,000 additional home sales annually. If you're buying in places like Lakewood Ranch, Welland Park, or right here in Sarasota proper, these small shifts in rates, they can make a difference between comfortably qualifying for that dream home or needing to scale back a little bit. It's up to you. And if you're selling, understanding how rate movements actually affect demand is key. When rates dip, more buyers are able to make offers. When rates jump, demands just kind of cool and quickly go away. That's why timing and strategy matter so much. Now, what level of rates will be enough to reverse this trend? No one can say for sure, though many believe anything with a 5 in front of the percentage sign would serve as a powerful tipping point for both buyers and sellers. With that in mind, we know that rates are rarely ever linear, but rather move within a range, moving higher or lower by week or even by day. It's the trend that matters over time. If you're thinking about buying or selling here in Sarasota, and you want to understand how today's rates really affect your decision, let's talk. If you're thinking of buying, let's get you pre-approved so you can act when you need to and not be left scrambling when you actually find that home of your dreams. And if you're thinking of selling, I'll break down a plan right in plain English so you can hit the ground running and be way out in front of your selling competition. If this video helped to clear some things up, hit that like button and subscribe for more local real estate insights and to find out what's happening here in Sarasota and all the surrounding area. I'm Rob Rovnak, and I'd love to help you any way I can. My contact information is in the box below. If you'd like to schedule a free, no obligation Zoom call to talk more about the area and what homes and what areas might be right for you, just schedule something below. For Living and Buying in Sarasota, I'm Rob Rovnak. I'll see you on the next one. Bye for now.